Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp, MGI and the TSX Venture Exchange. A 2015 drill program on the LH property intersected several high-grade gold intersections, including 11 meters of 20.66 grams per ton gold. Additional drill targets on the LH property have been identified by a 2018 drone airborne magnetic survey to further evaluate a pyrrhotite-enriched gold-bearing system. Please visit our website at magnumgoldcorp.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is home ownership consultant Ross Kay from thewealthyhomeowner.ca. Welcome back to the show, Ross.
And thanks for having me back, Jim.
Today, it's announced Canada has a new trade deal with the U.S. We know we were worried about no deal in the past, so what are your thoughts today, and how does that affect homeowners?
Well, I think all Canadians should be breathing a sigh of relief that the deal has been done. I think that everybody in Canada, I know we've talked about it before, I've talked about it with you before, no matter your political leanings, everybody needed to be pulling for this deal to get done. This is the one time where you can't let politics rule who you're going to support. And I think universally Canadians were very supportive of the current Liberal government in getting this deal done. That said, now, Jim, this deal is now done now, and now we're going to be allowed to criticize the government for their lack of approach on this file. It is pretty clear right now, and any politician who's out there that is watching, they need to understand when you're negotiating with someone who did hundreds or thousands of contracts, you are not prepared for those negotiations. Trump gave us, Canada, several opportunities right from when the first day he was elected until they got into negotiations with Mexico on their own, that Canada could have closed a deal that would have been more favorable than one we ended up with. So I think when we go to the polls next year, these kind of discussions really have to take place, and some critical assessment has to be underway. That said, what we're looking at today is we have already heard from the banks, a couple of the banks out there, Jim, warning that now that this deal is done, that the Bank of Canada is going to probably raise its interest rates in more of harmony with what happens in the United States raising their interest rates. And that really causes us, my firm, a lot of concern when we heard those thoughts today, because what happened by letting this deal go as long as it did before there was a deal, the fact that we didn't think there was going to be a deal, it meant that the Bank of Canada delayed their actions on interest rates. And I would say that we probably could have been a half of an interest rate, half of a full percentage of interest rates higher by now, had this deal been consummated, at least in principle, a year or so ago, which it could have been, that could have taken place. That it didn't happen. So now what we're looked at, the Bank of Canada is probably going to have to play catch up. In other words, the Bank of Canada is going to probably feel that they need to raise interest rates quicker than what they were going to do. Our perspective on interest rates is always home ownership and the home ownership market, Jim. That is our sole understanding and concern. We understand that between 60 and 70% of after-tax income goes towards putting a roof over your head. That is, as a society, that's the degree of financial importance home ownership is, or rental housing is, housing in general. So what happens is when interest rates rise too quickly, which is already what's going on, and it's what was common way back in 1990, the exact same thing happened. The housing market slows down. and it slows down too quickly. In other words, time is no longer the mitigating factor for a house price correction. If a government simply allows time to deflate a housing bubble, you don't see a whole lot of damage done. People only need to look over to Alberta from 2014 till today, where you see a housing bubble that has been allowed to slowly deflate. There was not a whole bunch of repercussions economically in Alberta because of the housing prices collapsing 24%. So right now, the housing market in Calgary is about 24% off of its peak. Now, what's happened is we've had 4 years of inflation that has been able to eat away some of that house price bubble. And then we also have house price deflation, or housing prices falling, where resale homes are dropping in what they're selling for. And then we also have new housing stock, where home buyers are increasingly choosing that new housing stock, which again simply means they're getting more house for their dollar. What we're worried about NAFTA today, Jim, is the fact that if the Bank of Canada raises interest rates too quickly, which we fully suspect that they're going to do, the recession, which is inevitable in a house price correction, will be accelerated and moved quicker. It also could cause the recession to be deeper. Now, we're not economists. We are housing market experts. We don't know how the rest of the whole economy goes. We only know the portion that's related to home ownership or housing. We know that portion of the economy has dictated the last 3 recessions Canada has fallen into. All metrics on that front have signaled that now for over 2 years in Canada. If the interest rates rise too quickly, which I would say, Jim, would be if we get 3/4% raises between now and June of next year, it could be catastrophic for our nation.
We'll have more with Ross Kay right after the break.
MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
I'm Kelly Jennings, CEO of Powerband Solutions. Powerband is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. Powerband Solutions trades on the TSX Venture Exchange symbol PBX and on the OTCQB symbol PWWPF and on Frankfurt symbol 1ZV. For more information, please visit us at powerbandsolutions.com.
Welcome back. We're speaking with Ross Kay. Ross, last week we learned a website in BC is releasing sold prices, and a new online real estate investment platform is allowing investors to enter the housing market for as little as $1. What impact could this have on the market?
Well, you've got 2 different scenarios there, Jim. The first one would be sold prices. So our analysis to date over the public access to sold price is that is inflationary. What I mean to say by it's inflationary, it means when you look at sold prices without the perspective of understanding how that sold price was arrived at or what it's actually saying, you have confirmation bias. In other words, if there are 10 houses in a neighborhood and they all sell for $100,000, people will automatically say, well, houses in this neighborhood are worth $100,000. A more detailed analysis or in depth will tell you exactly where the house prices really are. How many of those buyers overpaid? Did any underpay? What premium they paid? What discount they received? When This is the problem with sold prices. If you look down a street and you only see one home sold over the last 2 or 3 years, and then you go 2 or 3 streets over to find another house that's sold, maybe this year, and you try to come up with a solution in terms of pricing or market change, how much prices have changed in the market, by comparing those two, I would tell your listeners what I would tell them is you can't do that. That is how you get house price inflation in the first place, which is why the Internet National Bank House Price Index, the Korea MLS HPI, and your average selling prices are all skewed. They're not really measuring house prices at all. So in terms of the sold prices, Jim, it's nothing wrong with that information being out there. It makes our job way easier because we're getting questions about that, I would say by the dozens now, from our members who are calling in or sending requests for information in now that they have access to these sold prices. It takes a lot of work on our account to explain to them where their assumptions are wrong and how they need to read those prices. But then again, that information is out there, and it looks like this real estate broker out in British Columbia believes he's going to kickstart his business doing this. And just so your listeners understand, whether it's Realosophy, Zoocasa, Zolo, My Realty Check, Zealty, which is the one out in British Columbia, all these failed brokerages. These are all failed real estate brokerages. In other words, they're not making enough money by selling homes that they hope that there's going to be a magic bean that they're going to plant and they're going to reach the golden goose. They believe that sold price. These folks just don't understand. There are going to be thousands of websites available in Canada. Every single realtor will have one where sold prices will be available. So there is no competitive advantage to releasing sold prices. The other one is the new investing platform that we heard that was announced out in British Columbia. I think it's called IMBY or something like that. IMBYX.com or something is the website. And what it is somebody, a fella who created real estate websites for realtors, which were a joke when he created the websites. In other words, anybody who was proficient in the online business knew they were selling something that was ridiculously overpriced and made no sense. They sold that company to somebody else. They got out of the market before they couldn't get out of it anymore. They now have started an online platform they call for investing. So what this platform says is it says you can start investing in real estate for as little as $1. So you have someone who believes they have the experience, they have the knowledge to suggest you can invest with them and you can invest with as little as $1. Now, if that is not a red flag for everybody who sees this website, I don't know what a red flag is. You cannot invest in real estate for $1. You can't invest 100, 1,000, 10,000. A realistic real estate investment starts at about 50,000. If you look at the principals who are running this platform, which we did a quick check on it when it was brought to our attention, it's a joke. These are not highly skilled, long-standing professionals. These are people who think they can make a buck flipping property. What this platform actually is, Jim, what this platform actually is, how we interpret it, it's nothing more than a mortgage syndication site where you get no guaranteed return on your money. So at least with the mortgage syndicators that have been going out there in the marketplace that give you tell you what your minimum return rate is going to be, these guys aren't doing that. They are taking your money and then investing it in a flip of some sort or another. Whether that is a land flip, where they buy a single detached home, get it rezoned, and flip it to someone else, or get it rezoned, build the properties, and sell them to someone else, you're actually being a builder at that stage. And a builder, you need to be highly skilled, long-standing, a tremendous history in the business to be able to be qualified to risk someone else's money doing that kind of business. And none of that exists at this firm when we did our preliminary check. All this is another tech company who believes that they can convince consumers to give them thousands of dollars, which they say they will invest in the real estate market. What they're not telling anyone is that they're going to make the real estate commissions on all the properties that they purchase. Whether they take those commissions via commissions or they take it by equity in the property. That is what's going on. My hope in that case, Jim, in this specific case, I hope the Real Estate Council of British Columbia and the Superintendent of Real Estate for British Columbia looks into this company. Because I have watched scams like this take place for over 40 years. So I guess I should say I've been 30. My dad told me about them for 10, so that's where the 40 is coming from. These scams are easily run, the public is easily fooled, and the damage can be tremendous in a correcting housing market especially. There are ways that you can invest in real estate, and I will continue to say here on the show, real estate is the single best investment that anyone can make as long as they're investing for long-term gains and they're taking on no risk. The beautiful thing about real estate is it can be a no-risk investment with huge long-term gains. And in the current interest rate environment, the current recently added BC caps on rent increases, they're already here in Ontario. This makes the rental market, which is where the investor for real estate should be entering, highly, highly desirable. Just the opposite of what all these real estate investing networks are telling people. We tell everyone the best thing for a real estate investor is a cap on rent increases. When you have a government decide rent controls are in place, we are only going to allow rents to increase at this amount of money. You can sit down and do a 25-year outlook for that rental property, and you can calculate your returns with a degree of accuracy that is amazing. What's great about it, though, Jim, is the returns that you get. The returns are phenomenal, and actually rent controls guarantee your return. So this is one where both the landlord and where the tenant win, because they both win financially.
We'll have more with Ross Kay right after this.
Vatic Ventures Corp. is a potash exploration company focused on the Korat Basin in Thailand, the world's largest undeveloped potash resource. Vatic's management has extensive potash exploration and development experience in Thailand. Vatic will have marketing advantage compared to Western producers. Drill program commences this spring. Vatic trades on the TSX Venture, symbol VCV, and on Frankfurt, symbol V8V2. Visit our website, vaticventures.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ross Kay. Ross, we're into municipal election season across Canada. Toronto, the Vancouver area will be electing new city councils, and all the politicians are saying, I'm for affordable housing. Well, if they're making promises like that, what should they be doing for the electorate?
What they should be doing for the electorate is telling the electorate that they are not going to be able to solve the problem. Every time a government enters the housing market and makes any change to the home trading infrastructure, any change, that includes rentals, by the way, Jim, those changes are going to have a consequence on house prices and affordability. Governments listen to stakeholders. They listen to realtors. Right now, across Canada, realtors with their realtor pack or CREA pack are contacting politicians nonstop this week. They're inviting them down to their convention, to their realtor pack days in Ottawa. Andrew Scheer spoke there today. They're bragging about it all over the internet, saying how they're going to talk about affordability. They fool politicians, as they have for decades. Now, I'll tell you, Jim, I believe they're fooling them through their own ignorance. In other words, the realtors are really ignorant to what they're saying. Let me explain it to you this way. When Jim Flaherty reduced the amortization schedule, maximum amortization, from 40 to 30 years to 25 years, people said that was going to cause the housing market to crash, and that was going to cause house price inflation to housing prices to correct, or house price inflation to stall. Prices weren't going to go up. People weren't going to be entering the market. What we would have said was, because I wasn't working at that time in the consulting business, but I was giving this advice to my own clients at the time, those are actually inflationary decisions. When Jim Flaherty reduced the amortization to 30 years and then 20 years, what Mr. Flaherty didn't understand, and he did this, by the way, Jim, on the advice that Canadians were borrowing too much money with the longer amortization schedules, which actually, Jim, longer amortization schedules naturally cause house prices not to increase as rapidly. Just the opposite of what academics, economists, realtors, bankers tell everybody. The worst thing that happened for the housing market was Mr. Flaherty, who was doing this, he was genuinely doing this to try to save Canadians from getting over-indebted with housing, reducing the amortization. Because he reduced it at the same time that interest rates were falling. Those two factors in combination cause house price inflation to accelerate. And it caused house price to accelerate from the summer of 2013 right on through till April of 2016 in Vancouver and April of 2017 in Toronto. Just the opposite of what he intended to do. So when these politicians are saying we're going to build missing middle, that's the new common phrase now, that the builders, trade associations, the realtors are paying academics and economists to propagate with planners and everyone else. These groups, self-serving groups, are out there promoting the new term, the most common term you heard, the missing middle. What they're not understanding is when you build the missing middle, you automatically cause a bottleneck in how your sales people work up the property ladder. That bottleneck will create supply and demand imbalances, which are going to cause house price inflation itself. What they don't say is, look, the missing middle homes we need to be built at 60% of the cost, current cost, that small single detached homes are selling for. Builders aren't going to say that. Realtors aren't going to say that. Their spokespeople aren't going to say that. The academics who are getting paid by them, like Ryerson, are not going to say that because they don't want housing prices to get lower for the population. They want higher house prices so the banks can book more mortgages and so realtors can make more commission and builders can make more profit. What they need to be saying is we need to be building exit housing. You don't hear this discussion anywhere in Canada, exit housing. Yet you've got baby boomers that are now living at homes with 2 or 3 empty bedrooms, with all of their equity in the house, and they've got no place to move to. There have not been exit houses built. So when politicians and planners and, you guys had Jennifer Keesmaat, who went out to Vancouver and joined Westbank, and now is back running for mayor of Toronto, talk about adding 100,000 new affordable houses. That is inflationary. They are building houses that long-term the city will not need. What the cities need now, or regions, are exit houses. Houses of a higher quality that the owners of single-detached homes can sell their single-detached homes, cash out, take all that a whole bunch of that whack of cash that they got from their house, buy an exit house, which offers to them actually a better quality of life than the house that they're living in now, and they get all of that money to use for their retirement. You don't hear that discussion. If your listeners go on Google exit housing, you're not going to see it. You're going to see missing middle, hundreds of articles.
Ross, one thing too that you suggested that would help affordable housing is to push rapid transit into lower cost housing areas.
Yeah, and that just makes common sense. If a young couple can move out to Abbotsford, they can move out to Langley, and the house that they buy is a couple of $100,000 less money. Again, or they enter the property ladder out there at a couple of $100,000 less money. But the government has added transit to allow them to move into Vancouver if that's where they work, back and forth with ease and in an affordable manner. They will make that decision to do that. What people have to understand that politicians don't understand is that putting a roof over your family's head is the number one issue of importance to every single family in Canada. Canadians will do anything possible to keep a roof over their family's head. They will move heaven and earth to keep that roof over the family's head. They will move to Abbotsford and commute every day if that puts a roof over their family's head. They will move into a 200 square foot downtown condominium 3 days a week, switching with someone else in another condominium 4 days a week, and another 1 day a week in a hotel room, if that's what it takes to put a roof over their heads. That's how important housing is to the world. That's how important housing is to every single one of us. And as parents, it's even more important, or spouses. It's even more important, that roof over your head. And this is the concept that the politicians don't understand. People need to have a roof over their head as their number one concern in this country. We have a publicly funded health care, so that other issue that can pop up, which can maybe become the number one issue of importance for your family at certain times, is never there with Canada. You don't have to worry about how you're going to pay for your health care. One way or the other, it's going to be paid for. A house is a different story, Jim. A house is a choice. Do I rent? Do I own? Do I live in Vancouver? Do I live in Burnaby? Do I live in Abbotsford? Do I live in Toronto? Do I live in Oakville? Do I live in Hamilton? These are all decisions that people make on the single most important aspect of their life, the roof over their head. The reason why we built the wealthy homeowner from day one, Jim, was because the importance that the family home has over your life. It has never been treated with the respect it needs to be treated with. Its importance. It's only been sort of like vague talking points with people at certain given points in time, certain politicians at certain points in time when there's a crisis ongoing. We say your home is the most important aspect of your life every single day you're alive. And it needs to be treated that way. So politicians and planners, which the planners I really am upset with, because they simply don't admit, they don't get training in post-secondary to get their planning degree to talk about exit housing. It doesn't exist. Yet, exit housing over the next 30 years will be the single biggest economic driver in this country. The mere fact that you don't hear the Home Builders Association talking about building exit housing is a red flag for every one of the listeners that hear the show today. The missing middle is going to, if you build the missing middle, you're going to build more problems. You need to release the safety valve of your housing stock by allowing boomers to exit the current housing market that they've grown up in. They need that next class of homes, the exit homes being built. Now, what's going to be interesting, Jim, this is what, October 1st, 2018, is if we see anywhere else after this show is live where the topic of exit homes starts to be discussed. Because what I'll tell your listeners, Jim, is this. We'll talk about something on this show, something for the very first time. You can, in other words, you do a Google search, the commentary that we have in the show, you cannot find any commentary similar to that anywhere. All of a sudden, 2 or 3 weeks later, it's a common talking point. Let's hope that someone out there is listening about building exit homes instead of the missing middle.
Ross, thank you so much for chatting with us.
Hey, thanks for having me on, Jim.
My guest has been home ownership consultant Ross Kay from thewealthyhomeowner.ca. If you have any questions for Ross or the show, you can send them to info@housestreet.com. Our popular YouTube channel is Talk Digital Network. You can find us on Twitter @HoweStreet. I'm Jim Goddard. Thanks for listening.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com radio is a production of House Street Media Incorporated.